Hey, good afternoon, everyone. David Ghai here with Kingdom Minded Trading. Just recording a quick video to give you a recap on today's market action. So we always do at the end of each trading session, we do a top-down analysis of the overall market, and we also do that at the end of each week. So the first thing we look at are the major stock market indexes. So there's four major indexes: the S&P 500, the Nasdaq Composite, the Dow Jones Industrials, and then the Russell 2000 small caps. We do look at a couple other indexes, the semiconductors, and also the Nasdaq 100 stocks. That's my primary watch list. Those are the top non-financial Nasdaq Composite stocks. And then we also look at volatility as measured by the VIX. That's a Chicago Board of Option Exchange Volatility Index. And we look at the 10-year note to see what interest rates are doing. So to start off here, this first chart is on the S&P 500. We know that we're in a strong uptrend. This is a 3-month chart. And it broke out of this resistance area. It closed at a high on October 8th or closed at 67.53, broke out of that on October 24th, went up for 2 days, then went sideways and pulled back 1 day. So we're on basically a 3-day pullback, which is good. I like to see a 2 to 5 day pullback, and usually once we see that, we'll get what I call a setup, and that's what the chart looks like just before it gives an entry signal. So what we're looking for is a plan one bull flag setup, which means we're going to trade when it makes a higher low, assuming it does a higher low than this low here back on October 2nd. On October 22nd, we'll look for a trade to the upside. So if we wanted to trade the index, we would trade the SPY, exchange traded ETF, which trades just like a stock, but it's a closed-end mutual fund. So anyways, I'm happy to see a 2-day pullback. Right now the trend is up, so we keep trading that direction. But when we saw these gap ups earlier in the week, I posted an article that this could be an exhaustion gap. So we don't know. We just have to trade the direction of the market. In any event, that's where we're at on that index. So super strong index, but a 2-day pullback or 3-day pullback. Dow Jones Industrial is a little bit stronger, and then it closed up on the day from where it opened, but still basically a 3-day pullback, closed lower today than the day before. And, it's a 3-day pullback, but we would expect that. When we break out, we expect a pullback to a higher low. And that's when we're able to use our plan one bull flag setup. The Russell 2000, these are the small cap stocks. We can see here that the high on October 15th, or the closing, was 25.19. It closed here at 25.13, so a little bit lower, but still went higher and then pulled back. And so this is kind of a mixed signal. Technically, it's a bull flag setup. That's an inverted hammer. That's what that candlestick is called. We're going to be teaching on all this. But in any event, if we could trade the Russell 2000, we would be using the IWM ETF if we wanted to trade the index. But the main point here is this index also up. The composite 2-day pullback, which is good. I'd love to see a pullback 3 or 4 days or 5 days, and then we're going to get some good setups and good opportunities. The semiconductor index, those are the semiconductor stocks. That's a Philadelphia Semiconductor Index. Technology is super strong right now. It's the strongest sector out there, and so that's what that's doing. Nasdaq 100, the 100 largest stocks. Yesterday it was a hanging man candle. You can't see it because I have the Fibonacci tool. I'm going to remove that so that you can see that a little bit better. But we had what's called a hanging man candle up here. Okay, and that's what that is, and that's a bearish candle after making a big move up. And so if you were a counter trend trader, I'm not, but if you were, you would have got it. You would have taken a bearish trade below the low of yesterday's candle, and you would have been filled today and made some money. But that can turn right around. So it's really dangerous business trading counter trend if you're not an expert on trading the trend first. So I like to trade with the trend. The trend is my friend. Trading against the trend, usually you'll lose money. So anyways, Nasdaq 100 is super strong, and then we're going to look at volatility. We can see we hit a low here on volatility 3 days ago at 1562, spiked up for 2 days. but it's still relatively low. But when volatility goes up, the market will come down. And so if we got a spike up to these highs in the 25 area, we're going to see another pullback in the market, or an extended, I shouldn't say extended, but a greater pullback than just a 2-day pullback or 3-day that we have now. So it's not a bad thing. Actually, I don't mind if the market reverses and the trend turns down, because I can make more money on the downside and it's faster than on the upside. So we trade both directions. I don't trade sideways, although you can do that. I'm trading up or down. I trade with the trend. And so last but not least, we're going to look the 10-year Treasury note. That chart doesn't want to come up right now, but bottom line is we know interest rates are going down. The Fed just cut rates again this week. And, when interest rates go down, that's good. It makes, borrowing costs, less expensive for consumers and business owners. So that's a good thing for the economy. And so those are the indexes. The summary here is of the 4 major indexes. All 4 are up on the 3-month basis. The 2 other indexes are up. Volatility is relatively low, and then interest rates are coming down. So all of that is positive. Now we look at the S&P 500 sectors. We have 11 sectors that make up the S&P 500 stocks. I'm going to go in reverse order. Start with basic materials. That's on a 3-month downtrend, not too exciting. Communications, technically, we closed here 3 months ago in August. This isn't showing the whole chart, so let me go back or reduce the size here. Okay, so now we're seeing it. So if we go back to July 31st, we closed down here. Today we closed here, slight uptrend, but honestly, pretty weak right now. It's not exciting to me. I'm not looking for that. I would not be trading the ETF. There might be stocks in that group that look good, but energy, again, not too exciting. Financials, on a 3-month basis, down slightly. XLI, these are industrials. We can see we have some major resistance up here in the 156 area. So until I see a close above the close of this candle back on October 8th, if it closes above 155.59, then that would be a breakout setup. But right now it's not doing that. It's reaching higher and just resisting those levels. So that's not it's a good sector overall, but it's consolidating. Technology's strongest sector out there, as I mentioned. There would have been a good trade right here to get in above this candle. That's an example of this low here is higher than the low over there. And this high here is higher than this high. So that's what we look for in the plan 1 setup, higher highs and the pullback to a higher low. And then that gives us a setup. And then from there, we say we're going to get in above, as an example, this price was 284.38. So we might set a 50-cent filter or a $1 filter or a 25-cent filter and say, if it goes above this, I buy. And had you done that, you would have done well. If depending on the target you were trading, you might already still be in there and hit 305 from an entry of 285. That's a 20-point move, which is less than 10%. But this is these are the things we're going to teach on, how to set up targets and, decide on which targets to go for. Some people would just have taken the trade here and said, when it gets up here, I'm going to exit, which is fine. But then you would have missed out on that move right there. So, but anyways, technology, super strong sector. Again, we need to see a few more days, at least one more day of a pullback or something bullish before we would want to enter on that. Consumer staples, downtrend. Real estate, that's down on the 3-month basis, not too exciting. Utilities, when interest rates, overall it's a strong sector, but this is interest rate sensitive. I'm honestly not looking at buying utilities. You could if you're looking for income, but that's not what I'm investing for or trading for. Then we have healthcare, another strong sector. So the 2 strongest sectors are healthcare and technology. So technically, this is a bull flag setup. We can see here that it broke out of this horizontal resistance that it had on September 11th. October 1st broke out of that in a big way, hit those upside targets, went up a couple more days, then started pulling back for basically 1, 2, 3, 4, 5, 6, 7-day pullback. Gave us an entry to get back in. You could have traded to this high. You would have been out with a nice profit. or you would have, been, gotten out under this first bearish candle and taken your profits. So in any event, we have a higher high close right there on the 27th of this month, 3 days ago, and then we have a 2-day pullback, and now we have a bullish candle that's an inverted hammer. So you could get in above the high of yesterday's candle. But for me, I'm not trading the XLV, but I would be looking for stocks within that industry or sector, and then the strongest industry groups within that sector. And then last but not least is consumer discretionary. We can see here, August 14th, actually going back here, July 31st closed at 221.43. Today we closed at 233, so we're technically on an uptrend. But again, we can see that ever since we hit these highs up here in mid-September, we're going sideways to down. So that's just consolidating. It's not exciting to me. But to sum it up, on the sectors, if you look at the 3-month basis, we have 6 sectors trending up over the 3 months. We have 3 that are trending down, and we have 2 going sideways. So that again, just like the indexes, the sectors, that's positive news that we have. And then we're going to go, we already looked at volatility, interest rates we talked about. The last thing we're going to look at on this wrap up today is the Magnificent Seven. These are the 7 largest Nasdaq 100 stocks. We have good news on these too. Apple, it broke out of this resistance area over here on October 20th, went higher. Now it's indicating that we're going to, see maybe a pullback. So I would think that there might be a pullback under the low of today, and it might bounce at this 262 level, or even better, 256 or 255. And if it does that, then you can trade 255 up to 274 and beyond up to the 300 range. So that's going to be a nice setup, So we'll be looking at watching that closely over the next several days. Amazon, not too exciting. We closed, if we go back here on the chart, we closed on July 31st at 234.11, and today it closed at 222.75. But it says the price up here is 251.90. I'm not sure if that had earnings and gapped up today. That might be the case. If it did, that'll be a setup. Google, super strong. Some bearish, totally bearish candle today. We can expect at least another day pullback, maybe 3, 4, 5 days, and then probably get a bounce and hopefully make a higher high. Facebook, or Meta, I guess it's known as, sideways over the last 3 months. Actually, a little bit down, it looks like. Not too exciting to me. Microsoft. What we're looking at on Microsoft is, a strong stock with a 3-day pullback. And, excuse me, an entry on this would be above 535 area. And you got to target at least a 550, but, it's a very high price stock. If I'm trading this, I wouldn't be trading for 15 points. I want to see something where I can get at least 10% to the upside on what I'm putting my money into. And then I like to trade options because that multiplies the effect, so that's that. NVIDIA, super strong. I love this stock. This is one of the technology stocks. And so we had a winning trade on this, I believe. And, I think I posted three trades in our KWM financial channel. They've all been winners, I believe. And this is another example of something that's going to set up for a nice opportunity. I'd love to see it pull back to 182, but, might not do that. It might pull back to this, the high of this candle here at 195. Whenever it does, it's going to give us a nice setup to trade back up to the high of 212 and beyond that. So super strong stock. If the market stays strong and holds up and doesn't reverse to the downside, we have some good opportunities coming our way. And even if it does reverse to the downside, like I said, we can take advantage of that as well. We haven't really been promoting the service so far, but I do have one client and, one member, I should say, and he took advantage of this setup. And so we're in on silver. I've been talking about this. We've been waiting for a pullback after the high on October 16. The SLV, which is an ETF for silver, went on a pullback, 1, 2, 3, 4, 5, 6, 7 day pullback, and now it's moving back up. And what I would say is, if that's of interest, right now it's at a 44.50 area, and we have a target at 49, so that's a $4.50 move, which is 10% just to this target, which is a swing target. But beyond that, we have higher targets at 53.79 and 56.64. So we're going to teach people all the different strategies, all the different targets, and each person. Some people like to trade to the last target. Some like to trade to the breakout target. So it's really a personal preference. But that's silver. And then last but not least, that's actually mixed in here. It shouldn't be in there. It should be in my ETF list. Okay, but then Tesla, we can see that the high close over here was 459.46 on October 1. It closed at 460.55 on 2 days ago, and now it's pulling back into a bull flag setup. So, technically, there's a couple ways that this trade could be entered. You could enter it on a breakout of the of this original high of 459.46. You could get in off of that, or you could get in off of today's candle. There's a lot of ways of doing it, but today's not a bullish candle per se, but technically a bull flag setup, 2-day pullback. If it goes above this high, then you're in, but you have resistance right away. So, you could also say, take extra precaution, say I'm getting in if it gets to 471, and that clears all of this resistance. And then for an upside target on that, I use the Fibonacci retracement tool, and I just take the high on this candle, I measure down to the low over here, and it gives you a target in the 507 area and then 530. So it's going to set up nicely. It's at 440 now, so but again, it's not a super solid setup today just based on that candle. So if I was going to enter, I'd probably say close above this 470 and then trade it up to 530. So we'll probably put that trade set up on at the end of this week, and tomorrow we're going to roll out the membership options, highly discounted, and we're looking to start our live trading sessions next week, 2 hours every day, Monday through Friday, and so we can review market action, look at specific setups, and then place them in paper trading accounts through my Thinkorswim platform. And you can see exactly how things are done. And so, like I said, we have a 7-day trial offer coming tomorrow. It expires the following Friday, and it's going to be highly discounted. Lifetime membership option, and if you can't afford that, there's other options, to get started. And I made it affordable so that anyone who wants to take advantage of it can. And what I paid $26,000 on investor education for, you're gonna be able to get this for a lot less than that. And but it's not going to last forever. I'm going to increase the membership rates once we have the site fully developed. But in the meantime, we have everything we need to get started. We have 7 trading plans. We have understand what the how to analyze the market using technical analysis. We know how to manage our portfolio in terms of position sizing and how much risk to take. We know how to manage the trades. We know how to place the right order, so we protect ourselves if we're not going, all trades are not going to be winners. So the key there is to minimize our losses on the ones that don't go our direction, and then look for reentry. So in any event, I hope this helps. Looking forward to seeing everybody tomorrow at KWM, and I'll have some more information then. God bless.